All right, let's talk about the biggest, craziest financial story happening right now: artificial intelligence. I mean, is this a real deal, world changing technological miracle? Or are we just watching the dot-com bust play out all over again, just, with a much bigger budget? This is what we're going to unpack. So, to really get a handle on the stakes here, let's just imagine something for a second. Picture this: it's January 27th, 2025. And in a single day, NVIDIA loses $589 billion in market value. Vaporized. What could cause that kind of collapse? Well, how about a tiny, unknown AI startup in China? One piece of news could literally erase more value than the entire economy of most countries. That's how on the edge this whole thing is. Okay, so here's how we're going to break this all down. We're going to start with the big trillion-dollar question. Then we'll look back at some history, some echoes of the dot-com era. After that, we'll get into the hard data. Are the fundamentals actually real? Then we'll throw in a couple of wild cards. And finally, we'll talk about who might actually win this thing after all the dust settles. Which brings us right into our first section. I mean, this is the core debate, isn't it? Are we seeing a genuine, revolutionary technology take hold? Or is this just another classic speculative bubble, fueled by hype and a little bit of greed? Because when you really boil it all down, the question is just, is this time really different? Or have we seen this movie before? The skeptics argue that these bubbles aren't driven by technology, they're driven by a good story. And man, AI has the best story we've seen in decades. But eventually the market stops listening to stories and starts demanding results. So let's lean into that idea, the case for a bubble. And you really can't do that without looking at the dot-com crash of 2000. I mean, the parallels are they're impossible to ignore. Critics see the exact same patterns: the hype, the greed, and this complete disconnect from financial reality. And what's so fascinating here is how the buzzwords change, but the core delusion stays exactly the same. Back in the 90s, everyone was bragging about eyeballs, how many people visited their website. Today, they brag about parameters, how big and complex their AI model is. It's different jargon, but it's the same fundamental problem. You've got these impressive-sounding metrics that have absolutely no direct line to actually making money. So, what even is a bubble anyway? Well, think of it like finding a cool vintage vase at a yard sale for $10. Someone says, hey, I might pay $50 for that. And suddenly, people are buying it for $30, then $50, then $100. Not because they want the vase, but because they're convinced some other sucker will pay even more. The bubble pops the second you run out of new buyers, and everyone looks down and realizes, oh, I'm holding a $10 vase. And this just nails the skeptic's argument perfectly. You've got so many of these AI companies just burning through billions of dollars from investors to build these massive data centers and train models, all with no obvious way to turn a profit. They are, for all intents and purposes, money-losing machines that are gambling that somehow, down the road, it'll all just work out. But here's an even smarter, more subtle point, made famous by investor Michael Burry. He said the real danger in the dot-com crash wasn't all the silly startups like Pets.com. Nope. It was the big, profitable companies like Cisco building way, way too much internet infrastructure, this massive overbuild of capacity that nobody actually needed yet. And the fear today is we're doing the exact same thing, just with data centers and GPUs. Okay, but that's just one side of the story. That's the doom and gloom. Let's completely pivot now and look at the counter-argument that the fundamentals behind this AI boom are very, very real. The argument from the other side is actually pretty simple. You just can't compare today's tech giants to the profitless startups of the dot-com era. This time, they say, the boom is built on real products, real demand, and most importantly, real earnings. I mean, let's just look at the data for a second. Take Broadcom. They make key parts for AI infrastructure. In their last quarter, their AI-related revenue grew by a staggering 74% year over year. That's not a press release, that's not hype, that's real money from real customers buying real things. And it's not just about what happened last quarter. That same company, Broadcom, right now has a backlog of $73 billion in AI-related orders that they are scheduled to deliver over the next 18 months. Those aren't hopes, those are contracts. It's not speculation, it's a revenue schedule. So here's where the rubber really meets the road. Let's compare the valuations. At its absolute peak in 2000, Cisco was trading at a price-to-earnings multiple of over 200. It was pure hype. Today, NVIDIA, sure, it's expensive, but it's trading at a way lower multiple, and that valuation is actually backed up by explosive, real earnings growth. It's not just a story this time. The numbers are actually there. But it's never a simple two-sided story, is it? There are a couple of wild cards in play here that make everything way more complicated. Specifically, a geopolitical shock from China and the absolutely insane costs of this AI arms race. And this takes us right back to that hypothetical $589 billion crash from the beginning. So imagine this. Tiny Chinese startup, DeepSeek, announces they built a world-class AI model for just $5 or $6 million. And they did it using fewer, less powerful chips that aren't restricted by the US. Now, whether that's even true or not almost doesn't matter. Just the news would send a shockwave through the market because it threatens the entire argument that you have to spend billions on top-tier American tech to even compete. The second wild card is cost. I mean, companies like Broadcom and Oracle are spending billions upon billions just to keep up. But here's the catch. A lot of their new business is coming from custom AI chips, which actually have lower profit margins. So they're getting stuck in this painful squeeze. They're selling more stuff than ever, but they're making less money on each sale, all while their spending on new data centers is just going through the roof. All right, so for our final section, let's zoom out. Let's just forget about the short-term market swings for a minute. What happens in the long run, after all this initial hype finally fades away? Because here's a really important point. Even if there is a massive market crash, it doesn't mean the technology itself failed. It just changes who ends up capturing all the value. So the real question is, who are the actual long-term winners here? And the dot-com bust gives us the perfect lesson. Think about it. The big long-term winners of the internet weren't the companies that built the plumbing, the internet service providers or the hardware makers. No way. The real winners were the companies that used all that cheap, abundant infrastructure to create entirely new businesses. We're talking about Amazon, Netflix, Spotify. And the prediction is that AI is going to follow that exact same playbook. So this is the key takeaway. AI is rapidly becoming a commodity. It's like electricity. Soon, it's just going to be cheap, abundant, and completely interchangeable. And in a world like that, the long-term value doesn't go to the companies selling you access to the grid. It goes to the innovators who use that grid to build something incredible on top of it. And that really leaves us with this final crucial thought. A market crash and a technological failure are two completely different things. Every single major innovation, from railroads to the internet, has gone through this exact cycle. Hype, overinvestment, and then a really painful crash. But that crash isn't the end. It's a cleansing. It's the moment that washes away all the speculation and greed and reveals the true lasting value underneath. The only question is, who's going to be left standing to build on it?